Ladies and gentlemen, good day and welcome to the Q2 and half year ended 30th September 2023 conference call of Bank of Maharashtra. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. We have with us from the management, Shri A.S. Rajiv, Managing Director and Chief Executive Officer, Shri A.B. Vijaya Kumar, Executive Director, Shri Ashish Pandey, Executive Director, and all General Managers of the bank. I now hand the conference over to Shri A.S. Rajiv. Thank you, and over to you, sir.
Thank you so much to all of you for joining this conference call. As you are aware, today our quarterly financial results for the half year ended as well as the quarter ended 30th September 23 just concluded by around 2 o'clock. And we had a press conference also. And I will just go through this important financial parameters, though you might have already gone through that. Then we shall have the one-to-one interaction regarding any queries. So the total business of the bank grew by 23% to 4,22,000 crores, and total deposits is increased by 22% to 2,39,000 crores, and the gross advances increased by 24% to 1,83,000 crores. CD ratio of the bank is at 77%, while the asset quality gross NPA declined to 2.19% and net NPA reduced to 0.23%. Provision coverage ratio improved to 98.4%, and net profit increased by 72% to 920 crore for the quarter, with operating profit growth of 31% reached to 1,920 crores. Net interest income increased by 29% to 2,432 crores. Net interest margin improved to 3.89% as on 39/23. Cost to income ratio improved to 38%, though it is slightly more than the last quarter. That was basically additional some 60 to 70 crore provision we have made for employee expenses, because employees discussion is going on. So if it is required, it may be required. Otherwise, we can write it back. So ROA is improved to 1.37%, and the return of equity improved to 23.25%. CRAR improved to 17.61%, of which Tier 1 is 13.72%. Profitability is concerned, net profit is 72% growth rate to reach 920 as against 535 crore for last Q2 financial year 22. The growth rate for the quarter-to-quarter basis, it is 4.27%. Operating profit shown a growth of 31% to 1,920 crore as against 1,462 crore Q2 FY22. The same has improved by 3% on QOQ basis. NII grew by 29% on year-on-year basis to 2,432 crore as against 1,887 crore for Q2 financial year 22. NII growth on quarter-to-quarter sequential basis was 4%. Net revenues for Q2 financial year 23 improved by 29.73% to 2,389 crore to 3,100 crore. The same is increased by 4.5% on QOQ basis. Cost to income ratio for is 38.04, while 37.23 was the quarter ended 36/2023, and 38.82% for Q2 financial year 22. ROA is 1.37 as against 0.92 for Q2 92 and 1.33 for Q1 financial year 23. ROE also improved to 23.25% as against 18.32% for Q2 financial year 22. Profitability for the half year, net profit increased by 83% to 1,802 crore as against 987 crore for half year corresponding 3922. Operating profit has shown a growth of 42% to 3,784 crore on year-on-year basis as against rupees 2,664 crore for the half year ended 3922. Net interest income grew by 34% on year-on-year basis to 4,772 crore for the half year ended as against 3,573 crore for half year ended 3922. Fee-based income is also grown by 18.77% on year-on-year basis to 723.96% for the half year ended. Return of assets improved to 1.35% for the half year as against 0.87 for half year 3922. ROE also improved to 23.31% for the half year ended 3923 as against 16.9% for the year for half year ended 3922. Regarding RAM advances grew by 24.38% on year-on-year basis. Retail advances is grown by 20%, MSME by 26%, and agriculture advances by 30%. Capital adequacy improved to 17.61 with a CET1 of 12.28%. During the half year ended 30th September, bank has raised equity capital of 1,000 crore through QIP and Tier 2 capital of 515 crores. As regards asset quality, gross NPA, as I already told, it was 2.19 as against 3.4 as of 3922. The same was 2.28 as of 3623. Net NPA declined to 0.23 as against 0.68 as of 3922 and the same was 0.24 as on 3623. Provision coverage ratio improved to 98.4% as against 96.06% as of 3922. The same was 98.37% as on 3623. The bank holds cumulative COVID-19 provision of rupees 1,200 crore as of 30th September 2023. So these are the major highlights of the performance. Now I think we can go ahead with one-to-one question answers, and our entire team is there to give the figures whatever required. And if you are readily any figures is not available, please give your email ID and we will provide all the details to you. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Darshit from Robo Capital. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
Yeah. Very afternoon. So I just have two basic questions. I wanted to understand what is your loan book growth and credit cost outlook for the next 2 years, and also if you have any capital raising plans.
As of now, the loan book growth is 23 to 24% as of now, and the expected credit growth will be around 20-21% during the current year. As regards capital raising, as of now 17.61% is the capital adequacy ratio, and 1,800 crore profit is already booked, and we expect that the next half year also profit will be booking. So, including that profit of the current year, we are expecting the capital adequacy ratio may go to around 90%. So there may not be any requirement for raising Tier 1 capital at present.
Okay.
So
And
if it is required, Q3 we may go for some Tier 2 or Tier 1 capital maximum of 5. That is a debt instrument. Bonds we may think of that. So equity may not be required yet.
Okay. Thank you.
We move to the next question. Our next question is from the line of Ashok Ajmera from Ajcon Global. Please go ahead.
Good afternoon, good evening, sir. And once again, very rich compliments to you, sir, and the entire team for the fantastic performance, continuing the performance of the bank. If you see slide 4, out of 15 boxes, 13 are upward only 2 are downward, that is gross NPA and net NPA. This shows the excellent performance of the bank. And even if you look at, year on year, it is very good. Even on quarter basis also, everything, net profit is going up, your yield, NIM is going up, ROA is also going up. So there is nothing much to comment or to be negatively spoken about it. I have got only a couple of observations, questions, sir. One is on our going forward on our credit growth. If you look at the credit growth of the half year, it is just about 8,000 crore if you compare it with the March figure, because now let us look at the financial year, 23-24. So if you take the 21-22% growth of 38,500 crore, only 8,000 crore has been achieved in till September. So can we say that about 30,000 crore will come in only in this next 2 quarters, the growth in the credit? Similarly, on the overall business, a growth of almost about 75,000, 80,000 crore is expected to make it to 500 lakh, 5 lakh crore business. So on both the fronts, because deposits are seen to be declining in the last quarter. So one question on that, sir, if you can elaborate. And actually net, if the growth is 8,000, but what actually is the growth in the quarter, credit growth in the quarter, the gross credit growth in the quarter?
Yes, you have rightly observed that credit growth as of YTD level, I think it is 4 to 5 to 6%. And we have so secure assets, IBPCs during the half year, and that's already credit is come down basically because of our sale of IBPCs during the half year. That is number one. And that is in the market. And after the 3 months and 6 months period, these IBPCs will come back. So normalization will happen and in the second half. And second point is that generally the growth rate, if including these IBPCs, our growth rate will be now already grown by around 8 to 9%. And during second half year, only the major growth rate will be around slightly more than the first half year. So this year we are expecting 20-21% growth of credit. I think we can easily be possible. That is number one. So number two is deposit growth. During Q1, the deposits was the same thing what we have done. The reason was that market interest rate is we have given more importance for bottom line, profitability and NIM and margin protection. So when the interest rate is gone up and the CDs, we have not gone to CDs or any kind of differential deposits. So when the deposits we have brought down and around 7,000 to 8,000 crore excess SLR was there that we have deployed for the credit. So that in the existing assets itself, we could able to get additional 1 to 2% additional margin through this shifting. So still we have around 12,000 to 14,000 crore additional excess XLR is available. If it is possible, it may be possible that 4,000 to 5,000 crore we can bring it, this excess SLR, because though GSEC is improved slightly, but the yield is not up to the mark, because our average yield on advances is around 8.93, that means almost 9%, while the 10-year is yielding around 7.3 to 7.4. So there is difference of 1.7 to 1.8, that was we have that. And as and when it is required, we can, anytime we can do, and you may be aware that we have the lowest in the interest rate regarding deposit is concerned. Very well, the lowest, that which reflected in our NIM as well as NII growth and cost of deposits and cost of funds also. So the strategy which we are following is the bottom line has to be given more importance, but the growth we will continue to drive.
Sir, my second question is on our digital initiative. I mean, we are going very strong on that, and in every quarter we get.
So that our ED, Mr. Pandeyji, will explain you. Digital initiative.
Yes.
Yeah, please ask.
So, sir, I just want to know the digital journey where we have allocated a good amount of almost about 1,000 crore rupees a year. So like how many modules are ready and how many such products are ready which have started giving delivery or which have started being, put in the use, and how are we going forward to implement the entire digitalization?
Okay, I think your question is having 3-4 dimensions. So quickly I will try to address all those 3-4. So this is correct. The bank is having around 700 to 800 crores of expenditure on the budget, both revenue and capital, on the IT side. And the last, I think, almost for one and a half year, a lot of RFPs and other things are in place. Also, the bank is having the digital transformation consultant on board. And so the bank is at present working on the digital journeys, digital operations and digital compliance, all the three. And if you ask, the prior also, some of the analysts have asked some questions on the loan growth and the deposit growth and other things. So I think this will, the reply will supplement to even that also. So now, right now, we are actually having the STP journeys on the asset, on the liability, and all on the services side, all the three. And also on the fourth, which is insurance, third-party products. So as of now, almost, I think 12 to 13, 15 journeys we have STP online, and the video KYC is there, in which almost more than approximately 100 accounts we are opening per day. And coming to the PM Samiti, which is also even the government initiative, but then we have made it fully STP right now. And we have done the POC and other things on that. So it is actually, how it is helping is on the business front, getting the things done very fast. Second is the credit quality. So it is when, the technology comes and when the data aggregation happens across the lines, what sort of things you want under the BRE. So both the things are happening on the services front. So we have already launched online nomination and for the customer, and second is, our debt claim settlement. So like this, we are having 4 or 5 things which are already on the services side. And the next is on the insurance. So 2-3 journeys on the non-life and 2 on the health already is online. So if you ask the entire package, so one is on the journey side. Second is when it comes to operations, probably Bank of Maharashtra is one of the public sector bank having the 17 robotic process automation journeys, processes live. And at least another 20 are in production, means on the development. And this quarter, by the time we meet next time, probably we will be crossing almost 40 of them. So I think this is one of the highest in the public sector. Now what is happening with this RPA is, the bank is in a position to have a robust reconciliation, very good customer service, cost optimization, and the most importantly, which a regulator sees, is the reconciliation and the compliance. So this is the second part. Coming to the third part, where you see
the other things, which are moving to back offices. So the bank is also working on the various back offices things like the survey, which are mostly done by the branches. So the things are identified which are in the branches as a repetitive nature, which are not productive, and making the branches and the staff free for the servicing of the customer and, for the more business terms. So I think these are 5 and 6 various key areas in which the bank is working. And as I said, on the compliance side, the entire the audit function, we are now taking it to back offices using AI/ML. So as of now, we have already impaneled 54. I think another 50 are fintech companies are getting impaneled. So probably again more than 100. Right now, more than 15 fintechs are already on board with the bank, and I think this quarter you will see another 15 to 20 getting onboarded, which probably again would be the highest as far as the usage of fintech is concerned, which is all under the outsourced policy of the regulator and within the ambit of the guidelines of the bank and the regulation. So I believe we could answer you what you wanted to know, that what technology piece is going to help on the business side, on the operation side, on the customer convenience side, and also on the compliance side. Is it so?
Thank you, sir. Sorry to interrupt, Mr. Ashok Ajmera. May we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. Our next question is from the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead, sir.
Yeah, hi, this is Kunal from DSP Mutual Fund. So my question was on the restructured book, which I assume all of them would have come out of restructuring as of now. So if I could look at the numbers in terms of the personal loan specifically, so there was quite around 5-6% of the book which was written off during the half year. So how has been that book behaving of late? And also in terms of your new generation, in terms of the personal loans, how that book is behaving given the concerns sounded by RBI as well as the market participants. That's it.
Yes, as far as personal loan book is concerned, it is around 1,800 crore today, and the NPAs under that is 0.33%. As what you is probably thinking that the stress on the personal loan book is because is not that high, because we are very careful in selecting those. It is given to all salaried people who are also seeing the CIBIL and all. So all risk parameters are placed in. And as far as restructured book is concerned, you said that restructure, there are certain retail accounts which are restructured, which are those accounts which were restructured during the RBI framework, resolution framework during the COVID period, which are continued because we are given that benefit to all of them, and that gradually those are now reducing from that there.
But in that case, the repayment is in most of the account is regular. So we do not foresee in such account any material slippage.
Of course, with inflation is lingering, some rate of interest is definitely high, so that we are keeping watch closely. But still,
I can supplement.
Please, sir.
Yes.
I think you are asking about probably the COVID loan book on personal loans. So I think because that was one of the things which came at that point of time. Actually, it is behaving well, and if you see the last quarter also, there is quite a good amount of reduction in the book. So I think that is one of the things which you can always see from the RP 2.0 and other things. Now, when you came for regulatory guidelines on the personal loan, that is unsecured ones. So let me tell you that if you see the journey of the last 1.5, 2 years in the industry, put together both public, private and NBFCs. So there is a good amount of the business generation that took through the digital journeys on a personal loans. Actually, that is the key area of concern from the regulator side probably. But as far as Bank of Maharashtra is concerned, or maybe any bank is concerned, there are 4 things which are very particular on a loan book. One is the underwriting, second is the target group, third is the collection mechanism, and the fourth is the risk mitigation. Now, as far as the Bank of Maharashtra is concerned, if you will not see that our loan book rising very, like NTB and ETB. So certainly right now we have moved to ETB, number one, where we have time-tested people for the car loans and the housing loans. So the risk is mitigated, point number one. Point number two, coming to, we have some tie-ups actually with some esteemed organizations which are AAA and which are government. So there we have given a very lucrative terms, and on that basis we have actually done a good business on a personal loans. So STP, yes, we are coming, then we have rigorously tested, and maybe the going forward we will be bringing, but then we are very much concerned on the risk mitigation side, on the underwriting, target group, as I said, even the collection mechanism and the risk mitigation, all the four. So it is well under control as far as the RBI regulation is concerned, and the bank is very much concerned about that.
Thanks a lot for the detailed answer, sir.
Thank you. Our next question is from the line of Hatim Brochwala from JM Mutual Funds. Please go ahead.
Hello, sir. Thank you for the opportunity. So my question is on provisions. So I see that the provision number is on the higher side, even for the non-NPA part. So if you can explain the reason for it, and also mention what is the accumulated extra provision which we are holding in the balance sheet.
So during this quarter, the overall standard provision is 362 crore. Out of that, 325 crore we have made additional provision. So this is not required as per the REC norm, but you know that the present current economic scenario and war looming situation where that there is a crisis in Gulf, crisis is going to start in Gulf countries, and it may impact on the crude oil and definitely the other industry. For that, on the safer side, we have created a 325 crore provision, and rest provision was due to increase in advances. And you know that last quarter we have created 250 crore ECL provisioning, and maybe that after 2 years RBI will come with the guideline. RBI will instruct the bank to implement the India's. At that time, these provision what we created, it will give us comfort while making the provision under India's guidelines.
And sir, how much is the accumulated extra provisioning on balance sheet?
Sir, besides that, we are holding 1,200 COVID provisioning. So that we have not factored for the purpose of the CRAR or that profitability.
Sorry, how much you mentioned?
1,200 crore.
1,200 crore. And this is including the 325 you made this?
No. This is apart from 1,200 crore. So 1,200 crore COVID provision. ECL provision we created 250 crore, and now 325 crore is additional provision.
So total is like 1,775.
Yes.
Okay. Thank you. That's it from my side.
Thank you.
Thank you. Our next question is from the line of Himanshu Taluja from Aditya Birla Mutual Fund. Please go ahead.
Yeah. Hi, sir. Congratulations for a healthy set of the numbers. Just few questions at my end. So probably if I do recollect, you mentioned in the past one or two calls, in the past con call, that your total ECL provisions requirement could be around 2,500 crore. And possibly, if I do agree that you hold an excess provisions of 1,725, is that right? Is this the right to look at?
Yes.
Fair. Second is, yes, sir, on your margins, we have seen, because our general expectations that we may do see a margin decline in this quarter, but your yield on advances has actually been rise by 31 basis points. Can you just explain what triggered this rise in yield on advances by 31 basis point in this quarter?
You see that yield has improved because that we have also improved our MCLR. So one of the reasons that, and you know that overall slippages other than agriculture, it has not increased. So overall interest income has increased, and we have taken various steps to contain our cost of fund and cost of deposit. You know that we have not gone for the while deposit higher cost. So in one side that our yield on advances has improved, and other side we are able to contain the cost. That's why you see that NIM has also improved.
Okay. So now your earlier guidance of 3.5 sort of a NIM guidance for FY24, and I think in the last con call that you expected that was a peak of 3.86, and may possibly from 2Q onwards you may see a decline. Now will you revise your guidance now on the margin, and what sort of a sustainable margins you think one should assume?
See, if you see, the deposit rate, there is a cost stance from the Reserve Bank on the repo side, but then here and there normalization is happening between the deposit rates and the lending rates across the industry. Now,
Sir, sorry, I can't hear you. Can you be a little bit louder? Sorry.
Now is it okay?
Yeah.
Okay, thank you. If you see, there is a normalization happening across the industry on the deposit rates as well as on the lending rates. Though there is a pause from the stance from the Reserve Bank of India. Now, almost if we see the NIM which is in for particularly which you asked for the Bank of Maharashtra, we still maintain on a conservative side 3.5 to 3.6 plus minus 0.02. But at the same time, it is a very good observation from your side that there is an increase in the NIM, what we said. See, what happens now that for us, our side of balance sheet, we know the business. So in the last also when we were talking about, some personal something. So the basis again goes to the credit underwriting, which is how you underwriting, what is the target group and what is the risk mitigation. So if you see, we are very clear on the business side that which portfolio we are going to underwrite and how we are going to underwrite. So if we get an opportunity, so switch from the lower yielding to better yielding within the range, because the one is on the NIM side, the another is, if you see our presentation, where the AA, AAA and the other asset which we have given and shown, you will see a good chunk that the quality of asset is good. So in that chunk, say moving from BBB to A side, and if we are in a position to maintain from a lower version of ROI to a better margin, I think that is what we have looked into from account to account and we have moved. Probably that is one of the point, the avenues which are used, so it has given a yield, and certainly there were certain accounts which were yet to reset in the last quarter. So when they are resetting, so you see it around 2 to 2.5% repo was changed. So if you see the transmission, it was not to that extent. But then when reset has happened, that has also given a good. So I would say if you take a June quarter, the impact will come in the September quarter, and the early September quarter, which was reset, has given the impact in the last 2 months. Probably this is the one more thing which has helped in improving the NIM. So still we continue to maintain, I would not say guidance, but then we continue to our expectation of 3.5 to 3.6 plus minus 2% going forward.
Yes, sir. So last question, when we are going to see, according to you, a normalized tax rate, how much DTA benefits we are still yet to accrue, and when you think from which year onwards you believe you are going to see a normalized tax rate? That's the last question.
Yeah, since we are holding the carry forward losses of 8,000 crore, income tax losses.
Sorry?
That losses carry forward is roughly 8,000 crore. So that benefit is going to accrue for another 2 years, 24 up to 24-25. We do not expect any actual income tax liability, and the tax provision is either it is DTA or reversal of DTA. So we are having a DT of roughly 4,000 crore DT assets. So that benefit we will continue to get for the carry forward of losses.
Okay. Yes, sir. Thanks a lot.
Thank you. Before we take the next question, a reminder to all participants that you may press star and one to ask a question. Our next question is from the line of Darshil from Crown Capital. Please go ahead.
Hello, good evening, sir. Hope I'm audible.
Yes.
Hello.
Yes, sir. Please go ahead with your question.
Thank you so much for taking my question, sir, and congratulations on a great set of results. So I just wanted to know, maybe on a longer term basis, what kind of ROE can we expect, and the guidance that we are giving for, 23-24% of growth, is that can that sustain from the next 3-4 years?
Yeah, ROA, if you see for last 4 or 5 quarters, it is above 1%, and we have given the guidance ROA between 1.20 to 1.40. So that is our that guideline, and you can see that the current ROA, it is within that range. So ROA will continue to be above 1.20%.
And with brother loan also, will that also continue in this range only for the next 2-3 years? What kind of guidance can we have? An overall guidance for next 2-3 years that we feel
regarding ROA?
No, sir. With regarding our loan book and credit growth, so will it sustain of above 20%?
Yes, sir. 20% can sustain. Maybe 1 or 2% here and there, depends upon the situation. But otherwise, definitely it is possible.
Oh, that's great to know, sir. Yeah, that's all my questions. All the best, sir. Look forward to the great result. Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. Our next question is from the line of Samrat Jadhav from Prosperity Wealth Advisors. Please go ahead.
Hi, good evening, and congratulations for a good set of numbers. I just wanted to understand that what number of branches we did last quarter and what's the target for this quarter and overall in the year.
Last quarter we have opened 78 branches we have opened last quarter, and Q1 we have opened around 60 branches. So
total till date 60 branches.
60 branches. Yes.
And what is the target for the year?
Target of the year, another 125 branches.
Sorry, the voice was not clear. What's the number?
Yes.
125 branches.
Yes. 125 branches. Yes.
Okay. And this would be across India, as you said in the last quarter. That.
Yes.
Yeah. Oh, great. Thank you very much. That's it.
Thank you. Our next question is from the line of Gurvinder Singh from Fortuna Investment Advisors. Please go ahead.
Thank you, sir. Thank you for the opportunity. I wanted to understand your SMA-2 for accounts which are smaller in size. The SMA, the less than 5 crores accounts.
So regarding that less than 5 crore, earlier we were giving the 1 crore above, and if you compare with the June figure, it has come down. So as total SMA was 1,272 crore in June. Now it was brought down to 1,238 crore.
Okay. All right, sir. Thank you very much.
Thank you.
Thank you. Our next question is from the line of Akash Jain from Ajcon Global Services Limited. Please go ahead.
Congratulations, sir, for a very good set of numbers. I have few questions. One is, what is the guidance for credit cost? I think it is around 1.23% at the moment. So going forward for the whole year, what kind of credit cost we are expecting?
So, if you see the credit cost, so at present our net NPA is 0.23%, and almost that almost every slippage we are providing for. So the 1.6 is because of that, the 100%, almost 100% provision made. But if you talk about the IRAC norm, as per IRAC norm, that credit cost is below 0.5%. So, and what we are expecting, though this time the slippage on the higher side, in coming quarters it will come down, so definitely the credit cost will automatically come down. But having said that, since the bank is providing almost 100% on the slippages, so on books you will find that credit cost higher, but definitely as per RBI it is on the very low side.
I think the keeping in view the circumstances which is being right now, I think you may consider on the safer side 1% plus minus 10-15 days.
Yes.
I think that is a quite a good expectation on that.
Okay. So 0.55% is as per IRAC norms, correct?
Yes.
Okay. And so one more question. In the past discussion, we had said that we would be focusing on mid corporates, and the growth will come from mid corporates and in sectors like pharma, textile, engineering, goods, auto ancillaries, airports, effluent treatment plant, like projects of Namami Gange. So are we sticking to these sectors, or we are going beyond these sectors?
No, it is very good and really good to see that you are remembering that. So thanks for that. But then the bank as a strategic point is continuing that. And in the last quarter also, if you see around 800 crores, the textile we have gone around, I think 500 to 600 crore pharma we have gone. And one more thing we said when we talked about mid corporate, particularly that export is our focus. So I think since last quarter also, I am very sure that our export also we have increased for I think more than 600 to 700 crores. So what we are now looking at is not only the sector as you said is correct, the water treatments and other things. The second one also on the auto EV side. The third is that as you said, textile and pharma. And these sectors we are looking, but the more so we are looking to if it is an export oriented side, that is also it is our focus.
And so my third question is on the gold loan book. So what is the size of the gold loan book as on Q2, and what kind of yield on advances we are enjoying on gold loans?
Loan is 8,000 crore. 8,000 crore of gold loan book is there, and it is 9%.
See, the year-on-year growth on core gold loan witnessed about 2,358 crores. And YTD is a 27% growth. We are going with the robust growth. Actually Bank of Maharashtra was not at all in the gold loan business, whereas many banks were there for decades, which we have started very late, about few years before, but it's quite steadily picking up. And we could see that not only the numbers growing, that steadily the NPA is also come down. Our NPA as of today is only 0.18%. The reason is that almost every month we go for an auction and a time date. As soon as it became slippage, we release the funds. And we see a lot of scope for improvement in this particular area. Particularly if you see the banks of like Canara Bank and Indian Overseas Bank, even so-called old generation banks, they're all thriving on the gold loan, where Bank of Maharashtra is just now focusing. Considering you were asked on previously, somebody is also questioning how there is our advance book is sustainable. These are the areas we are not in the focus. We can build up this portfolio going forward.
So what is the aspiration in our gold loan book? What kind of book do we see in future?
We are expecting 25% growth year to year on our gold loan.
Okay, and my last question is on NIRCL. So I think in the past discussion we had said that we had identified around 2,000 to 2,500 crores worth of asset, I think as on Q4 FY23. So what is the status as of now?
NARCL, you know that is a dynamic list. Today, 11 accounts are shortlisted, amounting to 1,600 crore. Two are realized during this Q1 and Q2, and few more will be realized in this coming 2 quarters.
Thank you. That is all from my side. Congratulations. All the best for the future.
Thank you. Thank you. Thank you, sir.
Thank you. Our next question is from the line of Ashwani Maheshwari from Sky High Ventures. Please go ahead.
Yes. Congratulations on the great set of numbers, sir. My question is that out of total provisions of 984 crores during the quarter, 597 crores pertains to the loan book. And what is the nature of the remaining balance of 237 crores? And what are the reasons for the increase from 237 crores during the quarter to the last year?
Provisions is 985 crore.
Total out of 985 crore, if you see the provision for NPA is 597 crore and standard we have made 362 crore. As I told that out of 360 crore, 325 crore we have made provision over and above required as per the REC norm. So you know that present economic scenario and war-like situation. So and it may impact the crude oil and definitely there will be impact on the, not only the international, but domestic, there will be impact. So for that, we are keeping additional provision of 325 crore. Yes, sir.
Mr. Ashwani, you are not audible. May I request you to unmute your line, please?
Yeah, that's all, sir.
Thank you.
Yeah, thank you.
Our next question is from the line of Ashok Ajmera from Adcon Global. Please go ahead, sir.
Thank you for giving me the opportunity second time. I've got a couple of data points, sir, and some discussion on the just now the replies given. So, sir, Ashish sir just now said, I think that in the growing list of the sector for the credit growth, EV electric vehicles is also in focus. So I would just like to know that this EV loan scheme is for the individuals vehicles, or are we going to form a policy for giving credit to the bulk number of the vehicles to be bought for the commercial use or to be rented out to the corporate as a business? Is that any such thing is there for the EV credit growth?
Yeah. See, EV, there are, if you see, there are two things. One is the manufacturer OEM level. So actually that is what the focus was. So we have given few sanctions on that, which are projects underway, which are very good groups. So that was one thing. And the second is certainly, when it comes to a corporate governance or a ESG point of view, so being it is very prudent to be a part of the society on the environmental side. So the bank is also extending the home loans on the EV or for individual. As you said, on the commercial side, so that actually right now we have not formed any such thing, but then the exploration is on that if any, the good proposal, but yes, there were certain proposals where, the electric buses for the transport system as a whole, where it was well balanced for a certain metro level, some certain very good groups. So that actually we considered. So that is, but then as you said, a smaller vehicles and all that we have not yet explored as such on a commercial side. But yes, it is a prudent to be part of society, and the bank is very good in extending EVs at a concessional rates on this EV side. So I think that is the reply on your ask.
Yes, sir. Sir, now just continuing the discussion on the extra provision made, like 325 crore, just now the reply was given. When we already have the almost, I think that 1,200 crore extra provision on COVID, we already have that much buffer with us. Is there any need for continuously making higher provisions and restricting the profit growth? So what is the mindset, like how much buffer you want to build up in a bank, comparatively a bank of 4 lakh crore bank, how much buffer or a bank of the credit of 183 lakh crore or something, you already have 1200 crore. Now you built another 325 crore, so 1525 crore. So is there any target or something that you will go on providing or extra provisions, making extra provisions and limiting the profits for some more time?
No, it is not restricting the profit. For example, what our CFO was telling and the board of the opinion, little difficult situation wherever it is there. You know that now the petrol, these prices are, crude prices increased by 10 to 12 dollars per barrel, and like kind of situations always have a more provisions, and as and when it is not required we can utilize for that, otherwise we can take it to capital. And especially during the half year we have seen that little small stress we have seen in case of agriculture advances, where especially in Marathwada region where drought conditions are happening. So you know that climate conditions are always nowadays making changes. So if it is not required, we will utilize for our ECL provisioning, and we are created for that. That is the purpose. Only thing is, last year we have given ECL specific name we have given. This time no specific name is not given. So otherwise this accumulated provision can be utilized. Since COVID, why we are not fully utilized? During the COVID time, some of the assets we have restructured, including some retail assets and MSME account. Some small portfolio, 1 to 1.5% portfolio, 1,500, still continuing as a restructured book. Though restructured book we have given on an average provision of 20-25%, but it is an additional cushion available if anything comes, any changes, anything interest rate scenario. Once suppose still we thought of interest rate scenario is coming down, but it is still continuing. So once the interest rate scenario is favorable, these provisions can be returned back. That was the reason actually.
That's definitely a very prudent measure. Sir, a few data points. Sir, note number 14, the NPA loan transferred outstanding amount of 443 crore. In consideration, the amount realized is 208 crore. Can I know how much was the provision made on this 443 crores?
So this is 100% provision has been made. This is a return of account. So everything, whatever recovery will be in P&L only. You are referring to.
So the entire 208 crore has come into P&L only, isn't it?
No. See, this we have not accounted for. The recovery has come because there is some legal issue in this account, and that is why we have kept it in abeyance. The recovery has been received. That is a return of account. So we'll watch in the next quarter, and accordingly we'll account for.
So this entire 200 crore is additional profit is going to come in next 1 or 2 quarters.
That will come in future. Because some legal opinion we have taken, and once a clear-cut opinion get it, then we will book it.
Sir, the second note on note number 14 is that loans acquired 2,906 crore, where the tangible security is only 17.03%. These are all, the small, what is the nature of these loans of 2,906 crore which we have acquired?
This is
DA transaction.
Yeah, that is a DA transaction, including MFI.
Okay. So security coverage is only 17%.
Yes, that is, but the duration also is only 12 to 15 months. Average duration.
Yes. So my next is, sir, on the restructured assets. Outstanding is now 3,169 crore. And as you said that 25%, so 25% you count only on that 1,200 crore, or you count entire 3,169 crore?
Yes, entire amount.
On the entire amount, you expect?
Expectation means it's a cushion. We have kept it for extreme situation comes.
Point taken, sir. Now, only on the last observation or a question you may consider is that on taxation, just now the reply was given on the DTA and 8,000 crore and 4,000 crore, and the benefit is going to be accrued over a period of next 2 years, because even if we make a profit of 4,000 crore a year, still it will take 2 years. So, but this provision in the books, which affects our final net profit, PAT, in the books, is very erratic. In the last quarter, it was 205 crore. In this quarter, it is only 16 crore, whereas both the quarters are for the current year only. So, can I understand what is the logic of having so erratic provisions when nothing is changing and actually no liability is accruing?
It is not erratic. You see that deferred tax assets creation is two counts. One is based upon the assets depreciation. The other one is losses, and the third one is provisioning. So wherever provisioning, whatever it is there earlier we have done, that deferred tax asset is already cleared, and there is no room for further deferred tax assets reversal. Now, deferred tax assets kept in the books is only regarding depreciation of structural assets and other area only. So that is as per as 22 we have to continue. But regarding this income tax loss is actually the loss booked by the bank is more than 8,000 crore. That is another 2 to 3 years that this will continue. Now here afterwards this deferred tax assets reversal will not be there. Last time it was 200 crores. The last component of the deferred tax assets reversed during the last quarter. I think it is very clear.
Anyway, I think I'll get in touch offline with the...
Yes, you can touch with the CFO. He will clear that.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, that brings us to the end of our question and answer session. I would now like to hand the conference over to Shri A.S. Rajiv for closing remarks.
I am Vijay Kumar on behalf of our third MD and CEO Shri A.S. Rajiv and the Executive Director Shri Ashish Ji and top management consisting of all the general managers including CFO Mr. Vijay Srivastav Ji. On behalf of Bank of Maharashtra Mahabank Parivar, can we sincere thanks to all the analysts who have participated. We appreciate the questions, appreciate your quality questions, and if anything is left out, you would like to get a clarification, you are feel free to send a mail. We will reply to you. Thank you very much once again.
Thank you. On behalf of Bank of Maharashtra, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.